Wednesday the 17th. Good morning, folks. Details of the MOU between Iran and the US, they're now starting to emerge. The main take so far seems to be that Iran is being financially incentivized to sign this deal. We'll talk more about that in a moment. We're 12 hours away as well from Fed Chair Kevin Warsh's first press conference. That's a must-watch. And we are live at the G7 and Viva Tech in Paris as AI definitely takes the spotlight today, Anna.
Absolutely. Lots to talk about when it comes to the AI theme then with Viva Tech in focus and that G7 guy. Let's focus on the markets for the moment. Eurostoxx 50 futures telling us we are expected to go not very far at the start of the European equity trading day. Expected to be down by 0.2%. Brent crude unchanged. That sounds uninteresting. What is interesting is the 79 handle that we have on that Brent price. So we're below $80 a barrel. Guy was talking about the deal between Iran and the US. What does it mean for Iranian oil flows? Also crucial to the conversation. We'll get to that. And the pound in focus against the US dollar or against all kinds of other currencies as we make our way towards some important politics this week. But we also have some data out from the UK right now. The countdown to the opening trade, well, that starts right now.
Good morning, Wednesday morning. There's a lot going on this morning that we need to focus on. Oil, as Anna was just mentioning, sub 80, that's significant. And it comes as we begin to understand the details of what this MOU, remember it's only an MOU between Iran and the United States, actually looks like. The key takeaways so far seem to be that Iran is being financially incentivized to sign this deal, to take this process forward, to get into the negotiation period. Not only is it going to get financial incentives, but it's also, Anna, critically going to be able to sell oil. And this feels like the debate at the moment is whether or not Trump is getting a better deal or a worse deal than Obama got. And that is the debate that is raging at the moment. But Iran seems to be getting a lot out of this deal.
Yes, so from a markets perspective, where are we seeing this play through? Well, we are seeing it on the oil price, as we've mentioned. So an immediate waiver. Let's think about the financial rehab then that Iran is perhaps going through here. Immediate waiver on Iranian exports of crude. That seems to be important. Unfreezing of Iranian dollars is talked about in there. An end to sanctions, but TBC on the timing of that. Financing to the total of $300 billion. TBC on the details of that. All of those TBC elements are part of this 60-day conversation that is going to happen from the date of signing, we understand. And so we'll see where they go. But it does seem, to your point, as if there is something in this financially for Iran. And maybe that's why we get to that signing point on Friday.
Maybe we do. But then where do we go? I think is the key question. These financial incentives are getting a lot of play around the world this morning. And I do wonder if you are a hawkish Republican in D.C., how you are going to perceive this. And they want to have a vote on this one as well. They want to be part of this sort of program. And it just feels as if with Israel kind of saying what it's saying at the moment, the kind of the Republican hawks saying what they're saying at the moment, how do you price this? Is this a temporary story? Is this something that has longevity? We're going to be into the midterm process. We're already into the midterm process. How far will Trump want to go? It feels as if a lot is being given to get to this point. How much further can we take this? And what is the potential for interruption? Yes,
President Trump's intention to end this on these terms seems clear. But to your point, will the rest of the political landscape go along with it? And the important point on Israel, it does say in this text, together with their allies in the current war, as if this is binding on allies, which would be Israel. And yet we have not heard that is Israel's take, certainly, on these matters. So we continue to watch that. Let's talk about the Fed, because that is linked, of course, through the price of oil. We see it coming down. Are we going to get a hawkish hold? That seemed to be the conversation going into this week, was all about whether we get a hawkish hold. Does that still hold as an expectation, given what we've seen in the oil price recently? They might remove the easing bias. All of that that perhaps will be the definition of a hawkish hold. That's what we're looking for. Will there be, so many questions about what we'll get from Kevin Warsh on AI, on reform of the Fed, reform of the communication strategy, acknowledging the sticky nature of inflation or not. He prefers a different measure to the standard PCE that is thrown around. Acknowledging the firmness of the labour market. Does he come out wanting to prove Fed independence? So many things in play here.
Does he deliver a dot?
Yes.
Is a key question. What kind of forward guidance are we going to see from a man that has said that he doesn't want to deliver an awful lot of forward guidance, that he thinks the Fed over-communicates? And how will the market take that? I think is an open question at this point. What does the dollar do on the back of this? The dollar has rallied during the process of this war unfolding. We've seen the US as being a big oil exporter. That links these two conversations together. The dollar has benefited from that. Where does it go if we see a hawkish hold? If Warsh is slightly dovish, how does the dollar respond to that? I think the dollar is going to be a key metric this evening.
The dollar is a key metric. Also, we just showed on our screen another key metric, which is going to be two-year yields, of course, because they move on expectations of what the Fed does next. And what's interesting about the chart we just showed is the way that oil has dropped since we heard from President Trump and the Iranians about the signing of this MOU on Friday. Oil has dropped, and two-year yields haven't necessarily played ball and dropped quite so much. So the market has kept that restrictive pricing, kept its expectation that we'll get to Fed rate hikes at some point. And so how does that set us up? This is the input. Oil has dropped, but two-year yields have not.
Let's talk about what is happening with tech. Big day in Europe for tech. Don't often say that, but we're going to see it today. You've got the G7 meeting taking place. We've got a lunch that's going to be at that event. There's going to see a series of leaders coming to it. You've also got the Viva Tech conference, which is taking place in Paris. Tom and Fran are both at that event. We're going to see a series of conversations about how Europe is going to be able to harness the power of AI, maybe to deliver better productivity growth going forward. I think that's going to be a really interesting line that we're going to hear from this. But it just strikes the kind of the irony around all of this is that Europe is struggling to deliver this. The fact that when you look at that lunch that is happening, it is so US dominated, and that's the narrative that the US is still bringing to the table.
Well, in fact, it tells an even better story, doesn't it? Because it's US dominated, but it features Demis Hassabis, a company that to get enough investment had to go to, well, the US came. The US came. I mean, this was many years ago, of course, and the purchase of DeepMind. But that is where the European role, it seems to be at this point. Can Europe do anything to break out of that kind of role, a sort of sponsored by the United States role? It'd be interesting to see the dynamics. Will we see any of the dynamics between these guys who are usually fierce rivals? There was that awkward moment, I think, at an event in India where Sam Altman and Ahmadai avoided holding hands when everyone else was holding hands. I mean, these people don't necessarily get on with each other, but maybe they have a lot in common at the moment. If they're all trying to express, perhaps they're all trying to express to leaders, certainly in the United States, their resistance to the idea that they are caught up in the supply control, export controls that we're seeing at the moment from the US.
But it all comes under the umbrella of just what we're seeing, which is spectacular in the United States, with, to your point about raising money. SpaceX has just been phenomenal over the last couple of days. We're now worth more, or we've been kind of flirting around the level of Amazon. That is spectacular for a company that has the kind of revenues that it has versus what Amazon's look like. Are we going to see a shakeout period? And you've got the story of a kind of tech sovereignty, plus you've got the ability to finance. Europe in some ways could benefit from the tech sovereignty story, but how does it figure out a way of delivering the latter part? And I think that's the pitch that Europe needs to figure out this morning. Anyway, we've got some great guests coming up. We're going to be talking about all of this. L'Oreal's deputy CEO is going to be joining Francine in Paris at Viva Tech. We've got the Pascal CEO going to be joining us as well with Tom. We're going to be talking about quantum computing there. And Amazon Web Services VP is going to be joining us a little bit later on as well. We've got three great guests lined up out of Viva Tech. We're also going to be taking you to the G7 as well.
We have inflation in focus because of war in the Middle East. It has been for a very long time. And before that, many other geopolitical dynamics pushing it around. 2.8% is the inflation story out of the UK today. That's the year-on-year number. That is below the estimate. So we see a consistent inflation rate from the prior period, 2.8%. So no change there. We had expected it to go up to 3%. Safe to say that the pound didn't really know what to do with this information. It spiked higher, it seems, initially and then dropped. So does this take away part of the concern about inflation here in the UK? I mean, Bloomberg Economics still saying, going into this number, they were saying they still see an acceleration coming in the coming weeks. So maybe this is just delayed. Services, including airfares, was supposed to be part of the push higher in the inflation story. So whether that hasn't quite come through to the extent that was expected, but the 2.8% then is lower than the 3% that was expected.
How does the bank deal with this? What does the bank do with this? It feels as if the Bank of England is maybe backing away, stepping away. I'm not sort of talking about Megan Green here, but there are others, it seems. The tone maybe is shifting towards let's not make rash decisions or early decisions.
The market moved a lot on early expectations of rate hikes.
Yep.
Maybe that was enough. Maybe that tightened things. Maybe the market did the job for the Bank of England to some degree. But we hear from them tomorrow. We do.
Let's talk about what we've got coming up on the show that's going to help us with some of these debates. Christine Kumbie-Nielsen, Danske Bank senior FX strategist, is going to be joining us to talk about the data, the Fed, all the other things we need to talk about. Hugh Gimber, JP Morgan Asset Management Global Market Strategist, is going to be joining us, as will Victor Ripabelli, Synthesia's CEO and co-founder.
Let's tell you some of the events that are coming up today. Things to watch: 8:30 a.m. UK time. Riksbank rate decision. So it's not just about the Fed and the Bank of England and the BOJ and the RBA. There's also the Riksbank. The IEA will release its monthly oil report. That's at 9 a.m. UK time. We've talked about the AI bosses who are going to be in attendance at that lunch, that G7 Leaders Summit, of course, taking place in France. 1:30 p.m. UK time, we will get US retail sales. That's all in the build-up to the big one, of course, the Fed's rate decision. 7 p.m. UK time, we get that. And Kevin Warsh's first press conference, so there'll be that to watch ahead of the football, is perhaps the way that things will play out for many people.
Many people?
Many people?
Many people. Okay.
You're interested in
We'll go with many people. Coming up, this week sees a crucial by-election taking place in the northwest of England. We are going to be speaking to Reform UK Party Deputy Leader Richard Tice ahead of that vote. Plus, BMW is slashing its profitability forecast for the year and, as a result, ramping up cost-cutting measures. A lot to do with China, this story. More on what is fueling. We'll have to talk about fueling, the caution at the automaker next. Plus, we are going to take you back to Vivatech. And Evian, France, where G7 leaders are meeting. More insights on what's left on the agenda at the summit. Big clue, tech. If you've got any questions, if you want to get in touch with the show, IB Plus BBTV Go is the function on your Bloomberg terminal. This is Bloomberg.
Good things are happening. The ships are starting to move now. We're going to have it fully open by Friday. The ships are starting to move nicely. Oil is starting to go, and the prices are coming down rapidly. Stock market is going up rapidly. A lot of good things are happening, and most importantly, Iran will not have a nuclear weapon.
President Trump speaking at the G7 Leaders Summit, of course, keeping the focus on the developments with regard to Iran. Those comments come as Bloomberg reveals details of the 14-point draft memorandum between the United States and Iran. We understand Tehran is set to receive broad financial incentives as part of the agreement. We've been through some of the details. Let's get the perspective of our chief Europe correspondent for Bloomberg TV, Oliver Crook, who is at the G7 event in Evian in France. So what can you tell us? What else can you tell us then about the discussions about Iran and where this goes from here then, Ollie?
For G7 leaders and some of the other partners that have joined in these discussions, of course, the Qataris, the Emiratis, the Egyptians were also here yesterday. That was really the sort of big geopolitical day where the focus was squarely on the Middle East, in Ukraine. And of course, for the Middle East, I think for the Europeans, really the focus, at least publicly, is that there is seemingly this MOU out there, that there is this deal that is in the works, that it will ultimately lead to a diminishing of oil prices. Whether or not this is a better deal, I think is something that probably is more of a debate behind closed doors. But I think for the Europeans, and it sounds like the United States would like to enlist some of their expertise on some of the demining. They really want this deal to be very, very secure. They have concerns about the security of their demining mission, which is really something that you can only do during peace times. So if that is to advance, they really want to make sure that this deal is 100% sound. The question of Ukraine, also prominent yesterday. It sounds like the President of the United States wants to re-engage with that peace process. It sounds like he's speaking a bit more constructively. There was the first meeting between Donald Trump and Zelensky in almost 4 months yesterday. And of course, Zelensky wants that re-engagement, not just in the sort of discussions, but that re-engagement to be on the sort of Ukrainian terms. We should say the Ukrainians are in a much better position than the first half of the Trump administration, where the mantra really was that you have no cards. The focus today, of course, turns now to AI, the global infrastructure for AI, global coordination for AI. We have the CEOs of OpenAI, Anthropic, some of the leadership from Google and some of the other AI companies here within Europe. But of course, there's a big question about sort of AI nationalism and cutting off a lot of these avant-garde models from foreigners, non-Americans, and that is going to be certainly one of the big discussions here. There's also potentially a discussion that there was some reporting from Reuters that some of these countries are pushing to have a sort of trusted countries list. So potentially the United States could draw a larger role, a circle around those AI models, not just the United States, but more widely. But of course, I think for the Europeans, all of this provoking a good deal of anxiety, as you guys were talking about a little bit earlier this hour, that they are really, if you can even call them partners, very, very junior partners in the architecture of AI.
Ollie, we'll look forward to the coverage of that a little bit later on. Thank you very much indeed. Oliver Crook, our Chief Europe Correspondent, joining us at the G7 in Evian. Let's talk about what this all means for markets, for the economy. Christine Kumbi-Nielsen, Senior Fixed Income Strategist, joining us from Danske Bank. Christine, let's talk a little bit about kind of what's happened over the last 24, 48 hours. Oil prices have come down really sharply. Is that going to be enough for Kevin Warsh, the new Fed chair, to be able to signal a more dovish line coming out of the Fed going forward?
I don't think so. I think when we're looking at the communication from the Fed, if we're looking at the underlying macroeconomic developments in the U.S., I think what we're actually seeing in the U.S. looks to be a lot more underlying inflation really taking place. So very different than what we're seeing in Europe, for example. So I don't think that will open the door for a more dovish stance. I still think that they will remove this easing bias that has been in their communication so far.
OK, so I buy the dollar on this?
Yes, you do. I think that we'll see euro dollar coming lower. I think even if we don't necessarily get that communication today, I think they will be, a bit withholding in terms of forward guidance. But I think as we trickle along the next couple of months, I think it will definitely open up for some more dollar strength.
OK, and Kirsten, more big picture from the Fed. Of course, the focus will be on all of that. But in terms of stepping back and thinking about the reforms that Kevin Warsh wants to bring through, do we expect anything to change today? Like not everybody participating in the SEP, the DOTS, or any other kind of change to the way that this meeting is handled or the conversation with the media unfolds?
Well, definitely, I think let's wait and see. I think that we will be a bit more cautious in terms of the forward guidance that we will be getting from the Fed. I think that's definitely one of the things that he has criticized central banks for before, that they really want to fine-tune their policy stance using forward guidance. So I think we'll get more like a data-dependent approach, a wait-and-see approach, akin to what we're seeing with the ECB. I think in terms of some of the larger reforms, I think we'll have to wait and see. He's also commented that he doesn't want to make too big changes before there's been a thorough discussion. But I think DOTS is a good example of will we get there? Will we get everyone participating? But let's wait and see. Definitely an exciting meeting coming up tonight.
Yeah, exciting meeting. And what would we expect to be the fallout in FX markets? So buy the dollar was your suggestion. But where will that leave, for example, the yen, which is now hovering around that 160 mark? We've seen intervention at that kind of level in the past.
Yeah. I think it's been remarkable when we look at the dollar yen, simply how steady it has been trading for the past couple of weeks. Of course, we had some intervention a couple of weeks ago. I think when we look a bit ahead, if we do see some of these peace talks and peace agreements materializing, if we start to see more lower energy prices, I think that can push dollar yen lower. So I think against the yen, I'm more bullish on the yen than the dollar in that sense. I think there's room if we get some of this relief in sentiment that it could push the cross lower.
Kirsten, let's talk a little bit about the pound. What is priced into sterling right now? Is it a Bank of England that is going to hike rates or not hike rates? We've just had an inflation print that looks fairly stable. We've got a by-election coming up tomorrow. We could be about to see political turmoil, a new prime minister. What is priced? What is not priced?
I think, in terms of rate hikes, there's definitely an expectation that we'll get at least one rate hike from the Bank of England. When we look at the individual statements that we're getting from them, there's definitely starting to come some more hawkish-leaning elements. I think we will see one more member perhaps voting for a hike at the meeting tomorrow. So I think there's definitely the risk of hikes and a full hike already priced by the Bank of England. I think in terms of the political risk premium, definitely very big day for UK markets tomorrow. I think to some degree it is priced that we will start to see, if we see Andy getting this seat and if we start to see a leadership challenge in the UK. But I think it's not fully priced. I think the political risk premium of getting a leadership challenge, of perhaps relaxing a bit the fiscal stance, I think that's something that could drive the pound weaker, simply because it would spook investors in terms of UK markets. It would spook in terms of the gilt market.
How much weaker would you expect it to go?
I think against the euro, I think we could go at around to the 89 level, I think, here over the next 12 months. I think when we're looking at some of the other factors, I think looking at the relative growth outlook, the position is looking quite a lot weaker as well when we're looking at the euro area. So that factor won't be as dominating anymore. But I do think that we expect that the markets will gradually price out the expectations for hike from the Bank of England. I think data has also been to the weak side. If we do get a peace resolution, if we do see energy prices coming lower, I'm especially attentive to selling price expectations when I look at the UK. If that starts to come lower as well, I think this could all really feed into the narrative. Again, remembering markets were pricing cuts ahead of this war in Iran. So I think we could revert at least back to a more unchanged unchanged rate decisions from the Bank of England in the coming months.
Okay, Kirsten, thank you very much. Thanks for joining us. Kirsten Kumbie-Nielsen, Senior Fixed Income Strategist at Danske Bank, with a focus on FX as well, of course.
Looks like services was quite hot within that print, though, out of the UK. It'd be interesting to see how the bank deals with that. What else do you need to know this Wednesday morning? Goldman Sachs has advised on more than $1 trillion worth of mergers and acquisitions so far this year, the fastest any bank has ever reached that particular milestone. This is according to data from Deal Logic. The big deals include advising Dominion Energy on its $118 billion sale to NextEra, and Unilever's nearly $45 billion sale of its food business to McCormick. China's central bank has signalled a potential shift to an overnight policy rate, a move that would bring it closer to global peers and give policymakers there greater influence over short-term funding costs. A shift towards the overnight rate regime would mark another step in the PBOC's revamp of its policy, intended to promote the transformation of the monetary policy framework to a more price-based model. And the US Defence Secretary, Pete Hegseth, will attend a gathering of his NATO counterparts in Belgium this week. He is expected to push the message of burden sharing that has become the hallmark of the Trump administration's defence policy. European allies have been bracing for drastic cuts to the military assets the US is willing to dedicate to the continent's wartime efforts, especially amid conflicting signals from the administration officials on US troop drawdowns at overseas bases.
It's not a new theme, is it?
No.
From Pete Hegseth, that he wants Europe to spend more on defence. He wants NATO to be more ready to defend its own backyard. So these are tried and tested. I wonder, it's interesting timing from the UK perspective, having lost a defence secretary and another minister within the Defence Department, and then seeing day after day coverage of minor acts, should we call it, of Russian aggression around the UK and the way that is being delivered.
You're referring to what happened in the Channel yesterday?
Yes, which was curious, with a yacht.
A Russian warship firing close to.
And the day before that, where we saw the taking of a Russian shadow tanker by UK authorities, suggesting they were helping Russia to break sanctions. So all of that is just building, isn't it, to more of a defence conversation in the UK. And so maybe that is something that catches the attention of Hegseth. Interesting that we have some analysis from Bloomberg Intelligence saying that Europe needs to really up its defence spending, go from $587 billion to $850 billion in 2026 to really build out sufficient defence capability.
Do you cut spending on welfare? Certainly Rachel Reeves is talking about the idea that she won't raise taxes to fund defence spending. Now, how long she's going to be Chancellor for, I don't know, but I just wonder whether the arithmetic really works.
These are active questions. Coming up on the programme, we will not lose sight of the AI story, and in industries perhaps we haven't focused on it too much, the AI benefit for the hair and beauty industry. That's up next. L'Oreal will be speaking to us. This is Bloomberg.
Good morning. Half an hour to go until the start of trading this Wednesday morning here in Europe. We saw something of a sell-off in the United States yesterday towards the back end of the session. We now need to price that in. So we're seeing Euro Stoxx 50 futures down a little bit this morning, only down by 0.2%. The CAC is unchanged. US futures are bouncing. The Nasdaq is up by 0.6%, but still hasn't completely filled the gap we saw at the back end of the session. So we're a little softer on a two-day basis. Yeah,
and the bond market story of yesterday was really interesting, which sets us up for a slightly more stable picture this morning. So we saw bond yields falling, certainly in parts of Europe. That was the story at the 10-year horizon. Now we see pretty flat bond market performers. The Japanese story has caught up with the rest of the world in the sense that we saw lower yields there as well. Have treasuries fallen as much as oil prices, though? That remains a question. Certainly at the short end, that is something that the bond market is thinking about as we head into that Fed meeting where we will be watching the dollar and treasuries very closely. Now let's talk about AI. The world's biggest beauty company, L'Oreal, has been partnering with IBM and with NVIDIA as it aims to use AI to speed up new discoveries. Bloomberg's Francine Lacroix is at the Vivatech conference in Paris, where the convergence between beauty and tech is a theme. Francine, good morning.
Yeah, good morning, Anna. There's a lot to talk about here with Barbara Lavernos, L'Oréal Deputy Chief Executive Officer, also in charge of research, innovation and technology, because it is a conversation about AI, but it's also a conversation on how we change, of course, our usage of makeup. Barbara, thank you for joining us here on Bloomberg. Pleasure. Look, first of all, there's inflationary pressures. There's a lot of concern about what's changing in the world. Does it actually affect what consumers want to buy? What category has surprised you in the last 12 months?
Alors, let's say that you're right. There is inflation and the world is very turbulent, but this is this dopamine effect on beauty, or what's called the lipstick effect. The dynamic of the beauty market is very high, 3.5 to 4% this year. So it shows you how much it's dynamic despite inflation, because people want to take care of themselves, want to care themselves, to indulge themselves. So the market is very dynamic, and if I may, L'Oréal Group is beating this market. We are far ahead because Q1 we were at 6.7% growth. The dynamic of the market, to answer your question, it's dynamic in every category, from skincare, hair color, but the two ones that are the most dynamic, hair care and fragrances.
And has this changed? Because, I mean, you also have a lot of these big events and trends. One of them is GLP-1, which changes the way that people consume food. Does it also change the way that they take care of their skin and hair?
Absolutely. GLP-1 has an enormous impact on beauty. First of all, and we hear that a lot, on skin, because of sagging, because of less plump, because of skin quality. Number two, on hair, because of hair loss, because the hair has less vitality. And we did a lot of study. You have almost 2/3 of people under GLP-1 have this side effect. But something maybe you don't know, or the audience doesn't know, is that it has also an impact on fine fragrances. GLP-1 user, I suppose, because they are less eating sugar on their diet, etc., are looking for sweet fragrances, the cherry blooming, the flower blooming, the vanilla. So for us, GLP-1 is already a reality. We launched very recently in SkinCeutical branch, eye restructurer, precisely to replump the skin, or the Kills collagen shot plump, or at Redken brand, our hair growth booster. So you see, GLP-1 users are really so much downside when it comes to beauty, and here we are. So
it's actually changing tastes and the way that the beauty market and industry will sell in the future.
Absolutely, because today in the US, solely last year, you had 20% of the population under GLP-1, and it goes to 15%, if I'm not mistaken, to women. In UK, it's only 4%. In France, it's only 2%. It's a beginning. But the projection is really that maybe 20-25% of the entire humanity will be under GLP-1. So imagine for us how much our labs and our brands had to adapt to precisely target those plumpiness, vitality, hair abundance, and the new fragrances we will launch with Prada, Yves Saint Laurent, Mugler, are precisely those sweet, blooming scent.
Bala, talk to me a little bit about tech. So we're here at Vivatech. I was looking at numbers. I think 30% of users use some kind of AI help to find the next product that they want to use. How does that change how you sell, but also some of the commercial partnerships?
It changes very much because we had the first revolution, which is e-commerce, the traditional one. But today, maybe my generation, I'm 58, are searching on the bar today. People are talking with their own agents, the famous LLM, and describe their needs, make pictures of their own skin, describe the temperature and that will be surrounded by what's called the exposome, and then ask for precision advices. That this is the agentic commerce. So it changed radically the way you discover products, the way you engage with brands. So we have been engaging into this revolution like hell, and today at Vivatech, L'Oréal Group just announced its new partnership with OpenAI, fresh from the press, and with OpenAI, give you tangible example, concrete example. For example, with it's GPT, of course, GPT. For our brand Maybelline New York, we will provide the virtual try-on of all the makeup, where you can virtual try all type of shades and different texture directly in ChatGPT. When it comes to product discovery, we are working hand in hand with OpenAI to really boost this discovery. But more than that, because OpenAI is not only on this conversation with consumers, it's also about deep science, and we are also partnering with them on the microbiome science life.
So how much of your marketing spend will actually be diverted for some of these AI?
I mean, we shifted to this AI massively. As you do know, L'Oréal is the number 2 or number 3 advertiser on Earth, whatever the category, and most of our today investments are dedicated both, let's say, to digital, the TikTok phenomenon, the alley of the world, but also to this AI shift. And at L'Oréal, we invested massively into this AI transformation. Just to give you one figure, guess how much we did invest last year purely in tech and AI transformation? 1.5 billion euro, and we will repeat it this year. So you see, it's an incredible massive shift of our 40 brands, and the entire company is also shifting.
I mean, there is a lot of, I guess, societal or morality concerns that actually it's also pushing an ideal of the feminine beauty, which is unattainable. How do you, as L'Oréal, look at that?
I thank you so much for this question, because L'Oréal, we are against this archetype, let's say I want to look like an archetype, etc. You know, that's the contrary, because now with those type of agents, with this type of different TikTok, it is the reverse. You have the full diversity of hair type, of skin tone, of culture of beauty that is emerging everywhere.
But do you have these difficult conversations with the AI companies?
We don't have this difficult conversation with the AI company, because the way we interact, first of all, we are the leader in beauty. They need us to know what beauty conversations are. As such, we need their LLM. You see, so we have more than a century knowledge on beauty rituals and beauty conversation. So the way we do partner with them is in pushing our core values. And L'Oréal core values, in its beginning, is to create the beauty that moves the world, the entire infinite diversity of the world. So it's not one skin type, one archetype, one skin tone, one hairstyle. We are pushing the immense variety to have everyone on Earth finding his own, let's say, ideal on social network.
Barbara, thank you so much for joining us. That was Barbara Lavernos, the L'Oréal Deputy Chief Executive Officer. With that, I'll send it back to you, of course, in London, Guy, and we'll have plenty more throughout the day here in Paris.
Looking forward to it, Francine. Thank you very much indeed. Francine Lacroix at Vivatech in Paris. Tom will be with us shortly as well with another great guest. Coming up, BMW is set to fall in the European session. We think this after the German car giant slashed its profit forecast. Why? Well, we'll give you the details very shortly. That will be next. This is Bloomberg. Seventeen minutes to go until the opening trade here in Europe. One stock that certainly could be on the move is BMW. Its ADRs have been hit. Looks like it's lower on TradeGate. This after the German car giant has slashed its profitability forecast for the year ahead. this basically follows a worsening demand picture that is emerging from China, which now is its biggest market. Negative sentiment also emerging as a result of what we're seeing in the Middle East and the war that we've seen there. It's also expanding its cost-cutting program, leading to a one-time negative impact in the second half, which is why we're seeing some of the numbers that we're now having to factor in. Bloomberg's transport reporter Danny Lee joins us now. Danny, China doesn't look good. BMW, it seems, has no option now to cut costs, but to cut costs.
Yeah, good morning, guys. So BMW is really on the sharp end of this deterioration and this downturn in China, which is affecting a lot of automakers. But the way in which BMW's overall sales are also now scheduled to be falling over the year. So they have now downgraded its profit forecast in its car making business. So that's going to be around a 1 to 3% profit forecast from as high as 6%. And that is quite a deterioration from when, under the previous CEO, Oliver Zipse, said in early May at the first quarter earnings that they were holding the guidance steady. So under new CEO, Milan Nedeljkovic, he is clearing the decks for investors and shareholders to set more realistic expectations. And what we will probably see is a deepening in its cost cutting. We've already seen that in the R&D and the investment savings, efficiencies overall. But BMW is talking about accelerating the structural and efficiency savings. Would that include job cuts? That does remain to be seen, and the company BMW has not outlined any more details on that. But we do have to wait and see just how much further it will go, given the factoring of high costs and a whole range of issues it's now facing in the China market.
So if sales in China are not so easy to come by, Danny, then where do Chinese car companies and other global car manufacturers go looking for those sales? Well, I assume other parts of the world like Europe and the US. So what's the sort of global read across from this trend?
When you do look at the likes of Mercedes and Porsche, they're rolling out newer models, and that has largely been well received. And those rival car makers are seeing sales rise. They've also taken an earlier look at their cost and therefore in a better position. Whereas for BMW, it feels somewhat late to the game and therefore having to deepen and accelerate those savings. And when you look at the China context for BMW, the fact it's got its own EV lineup, this new class which costs billions to produce, that may make its pivot to EVs a little bit harder given the downturn we're seeing in China. And of course, for foreign automakers, they were already struggling against the Chinese competition. But if the Chinese car makers are struggling, this does not set a good kind of backdrop for BMW as it looks to trying to navigate out of a more difficult situation, much worse in the position than its rivals.
OK, Danny, thanks very much for the update. Bloomberg's Danny Lee in Hong Kong. Let's pivot to another of the moving parts this morning, and that is that we have seen a big drop in oil prices, now down by 0.9% at 78 is the handle. Brent crude holding below that $80 a barrel mark then, as we learn details of the US-Iran deal. A draft of the deal, which has been seen by Bloomberg, shows Tehran will get the right to immediately sell oil, tap a $300 billion development fund of some description, and eventually access its frozen assets. Let's bring in Bloomberg's Stephen Sapczynski, who is with us and can talk us through what impact this is going to have on the oil markets. And it seems to be that suggestion and that statement within this MOU then, Stephen, that the Iranians can immediately, if this is signed, supply oil to the global market. That is what has weighed on oil prices. Help us understand what's going on here.
Yeah, I mean, there are two elements here. Obviously, the opening up of the Strait of Hormuz has been a bearish sentiment for the market, and that's one of the reasons why you've seen the sell-off. And then yesterday, when it was confirmed that not only would the U.S. be looking to remove the sanctions on Iranian oil, but they'll also give waivers, sanction waivers, to potential buyers so that they can get that oil out basically immediately. I think that was one of the big questions going into these discussions and going into Friday when the U.S. and Iran will be signing this interim peace deal that will allow us for 60 days, was how long it would take for the U.S. to roll back sanctions, because sanctions famously take a long time to remove. Sanction waivers, on the other hand, are quite easy to release. In fact, the U.S. had already released sanction waivers on some Iranian oil and Russian sanctioned oil earlier in the year when oil prices were higher to help kind of ease the situation. So this will add barrels to the market. How much? It's still unclear. If they're producing and exporting about 1.5 million barrels per day, that's a bit more than 1% of global supply. It's not an avalanche of supply, and it will take time. But still, when you're looking at the market now facing a huge amount of volume coming out of Hormuz, all these ships that were stuck, plus strong U.S. exports, even this will continue to add to that bearish element in the market and likely continue to push prices lower.
President Trump says the Strait will be open on Friday. Is that what everybody else is saying?
It's interesting because Trump has continued to say this. He says it's going to be open. It'll go back to normal. But when you actually read the details of the MOU, which he's signing on Friday, it says that Iran will get merchant ships back to levels going through Hormuz within 30 days. So pre-war levels within 30 days. So even the MOU itself gives a bit more wiggle room. 30 days is still pretty ambitious. I think traders, ship captains, energy exporters, the people on the ships themselves have a lot of questions about how the opening of the Strait will go, because for the last 3+ months, it's been a very dangerous waterway to go through. There have been ships attacked there. There will obviously be questions about which routes they take. There will be questions about the mines in the area. The U.S. said that they're currently in the midst of removing the mines, and Trump said that himself as well. And then also, you have to look at the insurers. Are they comfortable with the ships going through? The ship owners, are they comfortable with them going through? So there are a lot of different details that need to be figured out. It isn't that this traffic will resume and get back to pre-war levels, 145 ships a day immediately, but I think it is expected that you will see an uptick, and that will grow over time as that safety is tested.
Stephen, thank you. Bloomberg Stephen Sapchinsky with the latest on developments in the Middle East and what they mean for the oil market. Let's turn our attention now to the markets in 3 minutes on the opening trade with Markets Live Executive Editor Mark Cudmore. Mark, good morning to you. I'm not sure there is much new to say on the Fed that has not been said already in the preamble to Kevin Warsh's first meeting, but let's have a go anyway. Are you expecting still a hawkish hold? That was the expectation going into this week, it seemed, from a lot of places. I don't know how the changes in the Middle East change that. What's your big expectation?
I think there's a good chance that he'll manage to surprise by being less hawkish than expected. I'm not sure I necessarily want to call it dovish, but I think that, expectations are clearly now very hawkish compared to where we were a couple of months ago, compared to where we were when Warsh was, given the role. So I think that I think he might be, he doesn't want to give aggressive forward guidance. That's a key kind of part of how he thinks about this, which means avoiding to kind of confirm the idea that the Fed is going to be higher for longer may be seen as dovish. So I think that the risk of him managing to somehow sound dovish in the press conference or less hawkish than people are pricing is a serious risk out there. It is hard to have strong views on where the asymmetric risk reward is ahead of this meeting because it is his first meeting as Fed chair. So therefore, I'm very open-minded. I think it's a pretty interesting one. It's going to set the game again for Fed markets, but it's not one to go in advance with a strong position.
If he is dovish, how do assets react? Does it start with the dollar? What happens at the front end? Do stocks take off again?
So I think the first thing is that you'll see some the front end rates come a bit lower. But I think ultimately they'll transition into a bit of a steepening move. I'm not saying long end yields go higher, but I don't think long end yields come lower as well. I think they stay stickier, and I think over time you could see them drift higher because it would be a message that the Fed is not tackling the clear inflation problem that's there. But I think that's probably a secondary move for a few days later. Short term, you see front end yields a little bit lower. You see dollar definitely a little bit softer, and it supports risk assets. And I think that the backdrop, given what we're seeing on Trump determined to sign this Iran deal, given what we're seeing from SpaceX, given the likelihood of Warsh being dovish, if anything, tonight, I think the momentum is still slightly positive for the stock market, but the risk reward is still terrible. I hate this market at the moment, given the valuation of SpaceX, and given the terrible deal that looks like it's going to be signed, but you can't be bearish right now because there's not a clear catalyst just yet.
Okay, and so is there more in terms of that support for the stock market, Mark? We seem to have covered the Iran story a lot this week in the run up to this signing that is expected to take place on Friday. Now we have more details of the MOU. Does this have more to deliver? Certainly some of the detail weighed on the oil price just yesterday.
I think because people are so disappointed by the terms in the MOU that there's now a decent tail risk that there's a problem with it getting signed, or at least that's how people are perceiving it in the market, which means that if it actually gets signed on Friday, it has a bit more of a positive impulse to supply. So it's not fully priced yet. I think at the moment that, into next week, if it's signed, we'll see another small boost up for stocks. Of course, if it fails, that's a bit of a disaster for risk assets.
Mark, great stuff. Thank you very much indeed. Our Markets Live executive editor, Mark Cudmore. You want to get Mark's views, the team's views? You can find it on your Bloomberg with the function MLIV Go. It's on at your Bloomberg terminal. So car stocks are going to be in focus.
Yes.
So BMW, its ADRs got whacked yesterday. Looks like it's trading softer into the market open this morning. The other stock that could be quite interesting is Ferrari. There's a great story on the Bloomberg this morning talking about the fact that Ferrari is basically pushing its client base to buy the new EV so that they maybe can jump the list when it comes to getting access to other vehicles. This is a sort of test of faith in Ferrari. You have to buy one of these EVs as a test of faith in the brand.
Show us your commitment. And I was thinking, is this new? Well, some pointing out in that story that Ferrari has often rewarded loyalty, and so maybe it's not new. And somebody from Sotheby's making the comparison with restaurants and saying it's like a restaurant where it's impossible to get a table. If you go every week, eventually they will find you one. And that seems to be, if you buy a Ferrari every week, eventually you'll get the one you choose.
It's pretty. It is, yes. It's like buying a Rolex. It's like buying a Ferrari. It's maybe getting a seat at the restaurant. But this has been a very divisive vehicle. But it is quite decisive for Ferrari's future and what it's going to be doing. If this goes well, maybe it goes down this road a little bit further. If it doesn't, and clients do resist, maybe actually there is a challenge.
It was an interesting test in kind of outsourcing the design, wasn't it? Which hasn't necessarily paid off. Coming up on the programme then, it is the opening trade. We'll get back to the markets. We might talk about fast cars a little bit as well, but we will get back to the markets. The futures picture looks like this for European stocks, expecting to go a little bit lower. US futures, though, Nasdaq futures up by 0.8% right now. This is Bloomberg.
Welcome back. Wednesday morning. What are we looking at? This was yesterday's session in the United States. SpaceX continued to charge higher, out of this world. Elsewhere, tech actually didn't have a great session, to be honest. And we started up there, and we finished down there. US stocks actually rolled over. Was there a broadening out? I think maybe if you squint hard enough, you can see some of that as evidenced in the market performance yesterday. But nevertheless, it just felt like a day that was always going to deliver a pause. And actually, as the US session progressed, it got a little bit more like a sell-off than a pause. Anyway, that's where we kind of start. So let's look at what that means for European futures. Unsurprisingly, we're a little bit softer. The Eurostoxx 50 futures are fairly flat. The FTSE 100 is fairly flat. The DAX is down a little bit more. It's been one of the main beneficiaries over the last couple of sessions. So we are going to see that maybe evidenced in the early part of the US session. But remember, US futures are now higher once again, 6/7 So that will be a narrative that we need to fold in as well, Anna.
Yeah, absolutely. So we'll keep an eye on those US futures, give us a sense of where the day goes from here, perhaps, as we run up to the Fed. Let's think about some of the stocks that could be active, though, this morning here in Europe. And autos is one sector we're watching. We talked a bit about Ferrari, but let's put the focus on BMW, planning to cut more costs after a China slump hits the outlook. They've cut back on their profitability forecast for the year. They're citing a deepening slump in China and the negative read across from developments in the Middle East up until this week, I guess. And so that's the auto sector. UK stocks, will watch those because we are, of course, digesting the inflation print, which came in weaker than expected at 2.8%. The pound is weaker as a result, so we'll watch gilts as well. Are they going to reprice the Bank of England a little bit? Waiting for that by-election tomorrow. And Publicis, we have seen that High Touch has offered Publicis $1.2 billion for part of its business. This is all about marketing technology, Guy.
Okay, here we go. Wednesday's session is upon us. Let's show you some numbers, give you an idea of what we are delivering. We think probably a slight softening early doors, but then maybe as the session progresses, we'll see, as a result of what we're seeing in US futures, a little bit of a firming. So the FTSE 100 absolutely doing nothing right now. We are flat. The Stock 600 is flat. We saw this yesterday. Looking for another catalyst. Where do we go? Does it come from the Fed? Does it come from the tech sector? What is going to be delivered a little bit later on in the Trump press conference? We're expecting to happen a little bit later on this evening. There's a lot of risk factors towards the back end of today's session after Europe has closed. So we're seeing a mixed performance. FTSE flat, CAC down by 0.1%. The AEX is going nowhere, as is the IBEX. Feels like we are on hold, which is what the Fed, ironically, is potentially going to be on a little bit later on. Is that the biggest risk event going forward from here? Is that what Europe is now waiting for, Anna?
Yeah, absolutely. Very much on hold for European stocks. That's a good way of putting it, because the Stock 600 is going absolutely nowhere. As we've said a number of times, US futures are pointing higher, so we are out of step with them, perhaps, at least for the moment. In terms of the sector picture, I see that media stocks is the best performing sector here in Europe, up by 0.4%. And perhaps this is about M&A. We see WPP is one of those stocks going higher. Publicis is a little bit higher, just up by 0.1%, but maybe that news flow I was mentioning surrounding marketing technology companies, LiveRamp and High Touch, maybe that has ignited some thinking around M&A within that sector. But that sector, quite volatile often, but it is a little bit stronger than the rest. The banking sector up by 0.3%. We see well-represented UniCredit, BPM, so a diverse, some Italian banks moving higher there, I suppose. Technology also moving higher this morning. No particular standouts within that space. To the downside, though, autos is the worst performer, and that perhaps has to do with the BMW story that we've been talking about, although we don't have an opening price on BMW just yet. So for the moment, the selling is in Stellantis, which is down by 2.6%, Renault down by 2.3%, and some of the suppliers, the likes of Omovio and Valeo, are a little bit weaker this morning. So that seems to be a story that is cutting through on a day that's more big picture, waiting for the Fed, really.
Let's talk about where we are going with gilts this morning. They are, I'm just trying to see if I've got a correct number yet. We're softening up a little bit, 4.756, a day ahead of a by-election, a day ahead of a Bank of England decision. We had CPI a little softer this morning than we were maybe anticipating, pretty much in line with the previous number, but services maybe looking a little bit more sticky. And I wonder whether that will be where the market's focus will ultimately come.
Yeah, it's interesting that we do see these yields coming down, particularly at the short end, actually. So down by around 5 basis points on the 2-year in the UK. So something to be taken away, perhaps, from that inflation print. Let's get some analysis of these markets right now with Hugh Gimber, Global Market Strategist over at JP Morgan Asset Management. Hugh, good morning to you on this Wednesday. It is a Wednesday, and it is the first appearance at the FOMC press conference from Kevin Warsh, the first time he will have been the chairman of this 2-day meeting to set policy rates in the United States. What can we add to the conversation? What's your latest thinking, given the big fall in oil prices, about the tone that he'll be wanting to set?
So for me, the press conference is all about whether Chairman Warsh arrives to speak on behalf of Chairman Warsh or on behalf of the committee. Because we know we're transitioning from a chairman in Jerome Powell, who was very much about building consensus across the committee and then presenting a united front when you reach the conclusion of those meetings. I think it's less here whether Kevin Warsh wants to go down that route or actually wants to say, well, I'm going to tell you what I think about the world and where I see the economy headed, and my colleagues might be thinking something differently. So that extent to which he wants to present that united front, for me, is the key question tonight. But ultimately, I think the Fed is still overpriced. We see no reason for central banks here to be hiking rates, not only because oil prices are coming down, but particularly given the softness in labour markets and wages especially. We have that for the Bank of England tomorrow. I think both the Fed and the bank can be on hold through the course of this year, waiting to see how the Middle East pans out, but importantly, offered that time by just a very different labour market backdrop to where they were a few years ago.
So how does somebody who doesn't like to give forward guidance come out and give a message? Well, I mean, he could say something similar to what you just said. He could push back against pricing of interest rate hikes, but he doesn't like forward guidance. So in that context, what should we expect?
I mean, I suspect if Chairman Warsh can go in tonight and say very little, that would be a good outcome. I think his view will be, we need to be patient. Yes, the economy is in a different place today to where it was 6 months ago, but certainly the activity that we've seen over the past week offers him that time, because the pressure for the Fed to be materially tightening up here, I think, is now gone. And we'll be watching the dots as well. It looks pretty clear that the cuts in the dot plot are likely to come out, but how long we have the dot plot for is another unknown. So it's all about tone. I think it's less about action. No need for the Fed to be taking any decisions anytime soon. If I was the new Fed chair and you offered me a few months just to sit back and watch how the economy was panning out, I think that would be a pretty tempting option.
Yeah, I wonder whether Trump would give him that time to do that. Is Warsh going to offer any reason not to buy stocks?
I don't expect him to tonight. I think the exercise that we're doing and all of our clients are doing today is where is there still value after this agreement has come together. We published our mid-year outlook on Monday evening, which was slightly unfortunate timing given how...
You're talking about the agreement when it comes to the Gulf.
Exactly, yeah. And so, in that piece, we had an upbeat view on the economy. We were expecting oil prices to come down. But the exercise we're now having to do is to say, well, how much of that has come out of the price? I still think there's value on offer in the stock market, but it's much more at a sector level.
Where is it?
It's at a sector level in consumer-facing stocks.
Yeah.
It's in some of the more energy-sensitive cyclicals, and it's in Europe, because this is where we've seen the laggards over the past few months. You look at the earnings revisions that have taken place so far this year, tech and energy have more than given you all of the upward earnings momentum in 2026, with many other sectors seeing earnings revised down. So I think there is still value, but it is much more granular beneath the surface, with the overall index level of the S&P 500 looking like it's done a pretty good job of pricing in this good news. But ultimately that's because tech's doing its own thing, and then you've had the energy strength as a result of the move higher in oil.
In keeping with that thought about Europe showing some opportunity. I mean, Barclays increasing their European stocks view to market weight today, so that seems to be a theme. Europe has some reliance on some sectors, though, that might not do well. I'm thinking about cars. We've got Mercedes shares dropping today. BMW, with their profitability warning, certainly dropping down 11% at the start of trade. I mean, this is a sector that is volatile, but it's important to Europe, or is it still important to Europe? I mean, it's perhaps a decreasing market scale.
I think that's the critical point. 5 years ago, Europe was a really auto-heavy economy and an auto-heavy stock market. It's less so today. I still think there are ample opportunities within Europe to pick your spots. I think the banks have further room to run with a steepening yield curve. Again, I'd add the ECB to a central bank which looks overpriced to us in terms of the extent to which it needs to raise interest rates. And then you think about places like chemicals, very, very energy intensive, the first place for people to look during an energy shock. It's been hard to be positive about Europe over the past few months because we know the region is much more energy sensitive, but it feels like we're turning a corner here. And so if 2025 was all about this embrace of global diversification, I see no reason for that not to continue now that we can start to think about moving past the worst of this shock.
Do you think, though, if we're pricing out rate hikes all over the place, you talked about Europe, you've also talked about the Fed, if we're pricing out rate hikes in the US, do you think that money will have the courage to come to Europe when things like SpaceX are just climbing and climbing day after day?
The challenge with tech here is that I think you almost have to strip it out of your regional discussion. We've been doing a lot of work thinking about where you want to be placing your tech allocation. I think the emerging markets are still an underappreciated opportunity here. You look at the way that index has derated so far year to date. We came in at about 14 times forward earnings on the 1st of Jan. We're now below 12 times forward earnings despite the strong performance, because the recipients of the big spending coming out of the US are often found in the emerging markets, Korea and Taiwan in particular. So I think there is an opportunity there. For Europe, it's less about trying to compete with tech, because we know if the tech sector is performing well, that European indices are going to struggle to keep up. But if we get this broadening out across sectors, which we were seeing working really well, I think that strengthens the case for regional diversification, when, let's be clear, there are still a lot of big unknowns that we're dealing with on the tech story.
Do you like this market? Do you like this equity market?
I mean, there's a lot to worry about, but there always is. And I think what we're learning this year is that the economy has gone through yet another seemingly massive shock. And yet here we are with earnings having been upgraded and with corporates showing resilience. So, we're thinking about this world where effectively the more chaotic the politics becomes, the more governments spend. Fiscal stimulus is driving growth. That's driving corporate profitability.
Is it sustainable?
Well, yes, if the earnings are still there.
No. Is the fiscal spend sustainable?
At the moment, we see no signs of governments wanting to give up. There is a pressure on politicians to be appeasing electorates globally. That pressure is going to get greater in the US over the coming months in the run-up to the midterms. So provided that the bond market is looking at this spending and seeing a growth benefit to it, it will carry on. I think you have to consider debt to GDP, not just in the terms of debt, but also in the context of what it's doing for growth and helping that denominator.
Hugh, great to see you. Thanks for stopping by to see us. Hugh Gimber, Global Market Strategist at JP Morgan Asset Management. Quick look at the Core 6. Let's see what is happening. We've got certainly some activity in the car sector this morning, but broadly, actually, some quite significant strength across Europe. You've got Novo up quite nicely. LVMH is rising. The defence stocks are having a fairly good day. Tech continues to tick on. Little bit of weakness coming through in maybe the safer end of the market. Look at what is happening with Nestle. But the real story this morning, as I say, is in the autos, and that is where Charlie is starting.
That's exactly right, Guy. We've got red lights flashing for BMW. They just had to cut those profit forecasts on the back of weakness in China. Now, we saw weak retail data out of China. There was talk that there was going to be a spillover into the auto space, and we're seeing that this morning on the back of those cuts. Cost cuts in focus as well. So we're seeing BMW down well over 7% this morning. That is red for BMW, and we're watching the broader auto space for these vehicle companies that really are struggling in that key market. But I want to tell a different story, and it's one that focuses a little bit more on the positivity on a different side of the auto space. Look at Auto One Group. That is that German online used car marketplace. They're actually up 9%, right? So selling used vehicles is actually having a positive moment here in Europe. They were able to maintain their guidance for 2026. Now, it's a different story, right? You're talking about used vehicles here, but we're seeing sort of a red and a green tail here in Europe on their Extron. So again, their price target. This is a semiconductor company based in Germany. They got their price target increased by JP Morgan. So we've seen a lot of positivity around semiconductors. This is that semiconductor equipment company up some 4% on the back of that increased price target from JP Morgan. Let's flip and take a look at Zealand Pharma. They had some disappointing results coming out of a weight loss drug trial earlier this month, and we've got Berenberg Research this morning downgrading them. The market not liking that, down well over 4%. Analysts talking about how it's going to take longer to unlock upside there. So difficulty this morning. Different story for UniCredit, up about 1%. This is interesting because banks in that Eurostock 600 index were the top performers yesterday. We're seeing a little bit of that trend continue. You saw Germany reject the bid by UniCredit for Commerzbank. Investors may be liking some of that. So does this positivity around banks continue? I think that's a big question for the day ahead.
Charlie, thank you. Charlie Wells with a run-through of those stocks on the move. Coming up, we will talk about UK politics as the UK gears up for one of the most consequential by-elections, special regional election in recent history. We speak to Richard Tice, Deputy Leader of the Reform UK Party. This is Bloomberg. Welcome back to the opening trade. 16 minutes past 8, so 16 minutes into our session, and we're pretty flat across European markets. Sorry, US futures still pointing higher. Here in Europe, under pressure, the auto space. So that's one end of the spectrum. On the other end, technology, retail, media doing a little bit better, Guy, going higher.
Let's talk about where we go next with UK assets. The next 24 hours is going to be hugely consequential. We've got a Bank of England rate decision, plus we've also got a by-election in the UK. Now, internationally, by-elections don't normally land as an area of importance, but this one really could. It's taking place in the northwest of England. It is in Makerfield. It is a northern town in England. The UK, remember, operates a winner-takes-all, first-past-the-post political system. And current polls suggest that what we are witnessing here is a big contest between Manchester Mayor Andy Burnham, who has basically got designs on becoming the Prime Minister of the UK if he wins this and ousting Starmer, and the Populist Party Reform UK, which is struggling at the moment maybe to coalesce its vote because it's facing an insurgency on its right from Restore in the UK. How does this all fit together? Where do we go from here? How important is this by-election going to be for global and UK assets. We're joined now by the Deputy Leader of Reform UK, Richard Tice. Good morning, Richard Tice.
Right.
It looks as if Andy Burnham is going to... OK, let me ask a question. It looks as if Andy Burnham is going to win this. We operate a first-past-the-post system here in the UK, and the vote on the right is fragmented between you, Reform UK, and Restore. How do you deal with that?
Well, this is the most important by-election this century in the United Kingdom, and it's neck and neck between Mr Burnham and the Reform candidate, Rob Kenyon. Forget Restore on the right, they'll get less than 4%. And whether or not Mr Burnham wins, as I say, it'll be very, very close on the day. The consequences for UK politics are clear, and that is that cabinet ministers over the weekend will threaten to resign unless the Prime Minister sets out a timetable for his departure. And you will see other leadership contests emerge, although Mr Burnham, if he wins, thinks that he can secure a coronation. There will be a contest. The two ministers who just resigned, Secretary of State for Defence John Healey and one of his deputies, Al Khan's, I think they're going to put forward a leadership challenge as well. So all will change in the leadership of the Labour Party over the coming months. It's just a question of how many people go for it, how messy the contest is. And the big number to watch here tomorrow is the UK's net borrowing number after a disastrous number for April last month.
Okay. Richard, let's just return to the vote split question, if we may, for just a moment. In theory, it is, as you say, neck and neck. But it looks like the fragmented vote on the right, and you say it's 4% that Restore will get, some people put it as high as 7%, could deny your candidate the win here. And I'm wondering whether or not we should start thinking about this as being a scenario that could be represented more broadly across a series of seats in the UK. We now have an increasingly fragmented right. We are unlikely, therefore, to see a coalescing around a single candidate. Can we start to maybe question Reform's ability to win what we thought would be safe seats? This should be, in some way, a more safe seat for Reform than many others out there. If you struggle to win this, is there a message?
It's the opposite. This was a safe Labour seat. The fact that Reform are neck and neck shows the complete transformation and the toxicity of the Labour Party. Mr Burnham has his own personal appeal. But look, the reality is voters vote tactically, and we believe that in a first-past-the-post system, we've led in the national polls for the last 300-plus national polls. On average, we're leading by 9 or 10%. And let's wait and see. But ultimately, if that is the difference, and you know, we still believe that we've got a cracking chance of winning. If that is the difference, it will reinforce to people just how damaging it would be for Restore to continue. So let's wait and see. You know, we're not afraid of competition. I'm a businessman. We believe in markets, sensibly regulated, of course. So look, that's fine. But there's lots of splitting of the left. Don't forget, there's the Green Party, who are polling almost the same as the Labour Party. So you know, that's the nature of a fragmented political system now, which is also riven with sectarian politics for the first time in Great Britain.
Richard, nice to speak to you. Thank you very much for joining us this morning. It is nice to speak to you, but I wonder where Nigel Farage is right now. We're on the eve of a big by-election, as you say, really consequential, and you have a candidate in that race. And we haven't heard very much from Nigel Farage, and people are asking questions about whether this has anything to do with the fact there's an inquiry into that £5 million donation that he received. I mean, are other people from Reform, such as yourself and others on the shadow front bench, if you like, are they taking the limelight because he is ducking the limelight? Where is Nigel?
He's literally on his way to Makerfield as we speak. He's campaigning there today and tomorrow. he's leading from the front. And on the one hand, people complain. They say that it's a one-man band, it's only Nigel. So then Nigel spreads the load to the very highly qualified team, and then we get complaints that he's not around. I mean, we can't win, can we? Look, I just make the simple point. Nigel is crystal clear. We are a growing team. We're leading in all the national polls by 8-9 points as an average, some of them by 10. They go up and down a bit in the same way that indices go up and down a bit. But the reality is this is an economy led by a party that's making a terrible job. The borrowing numbers are out of control. There's no growth, and the country wants change.
Okay, so it's a team effort. That's the message you're giving. Now, you flagged the borrowing story a couple of times, and I want to ask you actually about fiscal rules in that context, because just this week we have heard a bit from you about fiscal rules, and you said the problem with them is that they can be fudged, you don't meet them, and so do they really have much credibility? I'm slightly paraphrasing there. But if that's your view, and probably there are others with that view, but what kind of fiscal rules would you then adopt?
The most critical thing is we've got to get the borrowing down. You can't have an economy that's flatlining like ours is, that keeps borrowing £140 billion a year with no growth, and think that's going to end well. It's not. It's a bit like remortgaging the house ever upwards, hoping the value goes ever up, and at some point the value flatlines and then turns and you get into negative equity. So the borrowing number is a key focus. We have to cut wasteful spending, of which there's vast amounts, tens and tens and tens of billions, cut daft regulation. That will then start to trigger some growth. Only then can you achieve what we call performance-related tax cuts, when we show we can cut spending, because that's what the markets want to know. And, yes, you've got the fiscal rules, but they never seem to be met, and they constantly get pushed out. And at some point, you have to say, stop spending a lot more than you're earning, start cutting spending, get some growth back into the UK economy.
Thank you very much, Richard. Thanks for joining us. Richard Tice, Deputy Leader of Reform UK. We will also be speaking to the leader of the UK Conservative Party, Kemi Badenoch. That's coming up later on the programme. You can catch that exclusive interview after 7 o'clock London time. Really interesting, then, that he's talking about how close it's going to be. I suppose maybe that's just an effort to get out the vote. That's the context around this. But yeah, working towards what will be, for international investors, a by-election with some importance, which is odd.
You don't normally talk about by-elections being important, but I think the context here is important to understand. The first-past-the-post system that we have, winner takes all. We obviously saw that in the last general election. The Labour Party's vote count was relatively low. It took a huge number of seats. What happens now in a much more fragmented situation is going to be really interesting. He was highlighting Burnham's appeal in this particular seat. But what happens more broadly if you get this much more fragmented story on the left and on the right? How easy is it going to be to call British politics, price in British politics, the turbulence that it could cause?
Yeah, Keir Starmer's currently at the G7, of course, and that's where his focus is. Although back here in the UK, we're talking about this domestic politics. AI will certainly be a big feature of the G7 today, and we're going to be talking a lot about technology in the next part of the programme, so we'll keep you briefed on that front. This is Bloomberg. This is the opening trade, 30 minutes then into today's session, and this is a pretty unchanged picture that we have on the overall markets, actually up by 0.1%, but not by much. So we're pretty flat here in Europe. US futures continue to point quite substantially higher, in particular Nasdaq futures, and we're waiting to hear, of course, from Kevin Warsh later on today. So that's the big set-piece event of the day, waiting for the Fed under a new chairmanship. The DAX is under pressure today, and that is, of course, very much to do with the auto sector. We've had a new steer on profitability from BMW. That seems to be weighing on the sector more broadly. The CAC aren't going nowhere very fast, and the same really of the FTSE 100 guys. So a lot of the action to the downside on autos, but overall the Stock 600 moves a little higher.
Yes. I have nothing to add in terms of providing fireworks. Look at what we are looking at here. 301 stocks up, 283 down. I think we're fairly balanced when it comes to the winners and the losers. Volume is pretty much average, so nothing again, therefore, to see there. Let's talk about maybe some of the single name stocks. We're getting a bit of fireworks there. MSC, this kind of giant container ship business, looking maybe to get even bigger. There's a story that maybe it's looking, or its owner is looking to acquire a stake in Hapag-Lloyd. That stock is up very nicely. Straumann, this is a dental implants company, up by nearly 10%. Also, One Group, we were talking about the kind of the flip side. This is the used car side of the auto story, and it is up very nicely in Germany, up by 8.5%. So a mixed picture there emerging on the auto sector, because this is what we have on the downside. BMW down very heavily, talking about cost cuts, talking about a downgraded outlook. That stock is off its lows, but still down by nearly 7%. The whole auto sector is under pressure. Well, actually not the whole auto sector. If you're looking at a used car, the situation maybe looks a little bit better. Mercedes is, though, down in sympathy to BMW. And I think it's a Berenberg downgrade that is knocking Zealand this morning. It is down by 4%, Anna.
Let's get an update then, Guy, on the latest on the geopolitical agenda. Iran is set to receive broad financial incentives as part of its agreement with the United States. We understand that will include the right to sell oil immediately, to tap a $300 billion development fund, and get eventual access to frozen assets. SpaceX jumped for a third straight day on Tuesday, overtaking Amazon in value to become the fifth largest stock in the world. The gains in SpaceX shares are a sign of consistent investor demand, calming fears perhaps that the record IPO would be too large for the market to digest, and paving the way for potential public offerings from AI competitors. And Federal Reserve policymakers are expected to hold interest rates steady later today, posing an early test for the new Chairman Kevin Warsh as rising inflation erodes households' purchasing power, and President Donald Trump continues to press for lower borrowing costs. Guy.
Okay. Let's carry on our analysis of what is happening in these markets and get an assessment of what this morning's picture looks like. We are basically waiting for the Fed to arrive and to figure out exactly who Kevin Warsh is. Is he a dove? Is he a hawk? Does he believe in forward guidance? Does he not believe in forward guidance? What message are we going to get a little bit later on today? Let's try and answer that question. Markets Live strategist Scarlett Montgomery-Koenig joins us around the table. Good morning.
Good morning. Yes, very exciting day.
It is. We're waiting for Warsh. What are we waiting for? What do we think we're waiting for? What will be a surprise today?
I mean, I think it's a relatively low bar for a surprise in terms of it's his first meeting. We have no idea kind of what side he's going to come out on in terms of we've had a shift on the Iran view and that we have lower energy prices now. So maybe he takes that as a signal to be more dovish. But we also know that AI is inflationary right now and that it's just consuming more commodities, and that's meaning infrastructure build, et cetera, contributing to inflation. So I think there are a lot of questions around what his messaging is going to be. My kind of base case is in line with orthodoxy. There's quite a lot of data still to come. We're seeing how these shocks work through the economy. So if I'm Kevin Warsh, I'd rather wait to see how that develops and take it a little easy my first meeting. I think it's also important to note that the SEP and DOTS come out this time. And so I'm kind of more thinking about how much the market looks towards that versus Warsh if you have a more divided Fed.
Yes, it'd be interesting, to see what happens to the DOTS. I wonder, thinking about AI and the role it plays, you could see a world where Kevin Warsh came out and said in the short term in the short term it might mean this, but I stick to my longer term view where it means something more deflationary. But then that might look a little bit like forward guidance, and then he's not supposed to like forward guidance. So how do we limit our expectations, I suppose, Skylar, with that in mind? I mean, we spoke to Hugh Gimber earlier, who said he possibly doesn't want to communicate much in terms of the outlook. Really?
Yeah, and I mean, then you have to take direction from the SEP and DOTS. What I will say is you could have a forward view that inflation will eventually come down because of AI and the productivity booms, but they need to deal with the data right now, right? We've had a very dovish Fed for years now where they've had more easing in their policy bias despite inflation being above target for years. And that was okay when inflation was trending sideways, but it's rising now. And CPI, yes, the last print was a little bit more encouraging from a core perspective, but it's still more than twice the target. And so I think the market's shifted in reaction to that data, and because the data leads what central banks are doing at this point, because we don't know how supply shocks eventually feed through over time, that's going to continue to lead, and it's a relatively low bar for the Fed to be hawkish, and I think they just need to leave the door open for tightening.
How volatile do you think UK assets are going to be over the next 24 hours?
This is the big question. I'm actually relatively positive on the pound. I think the market's, kind of tired of hearing about political noise. It's been a really long time that it's like, Starmer is going to go out of power. We're going to get someone that has more fiscal ease bias. I think if Burnham doesn't win, yes, that's kind of more negative for a long-term outlook, but Labour is not going to call an election before 2029, right, with polling so poor. If he does win, what we saw at the last election when Burnham odds were rising was your GBP spiked up, and then it came down because he sustained this idea that you're going to have deficit improvement or at least some kind of fiscal tightening in the bias. And I think that's because the market has kind of shaped the way Labour does policy now from a fiscal perspective, and that's still there in the background. So I think it's very hard to see a lot of fiscal slippage from the Labour Party. And so, yes, it's a day risk, but further out, you're not having a huge fiscal change. And I think, too, for the pound, you have to keep in mind that it has one of the highest carries in G10. It's one of the only kind of risk-positive currencies that isn't highly correlated to commodities with oil prices coming down. And there is a premium built in from a political perspective.
And for the gilt markets then, Skyler, I mean, the fiscal rules, obviously they're written by politicians. They can be ripped up by politicians and changed. But the gilt market does seem to attach some importance to them, or at least they like some fiscal discipline by some form, in some format. We spoke to Richard Tice, who, of course, is from the Reform Party earlier on, and he just this week he's been talking about the weaknesses, which are much discussed around having fiscal rules, that they can be fudged, people don't meet them, and then you wonder whether they have much credibility. And he says really what matters is just getting borrowing down. Is that still a preoccupation then for gilt markets? What do you think gilt markets are watching in all of this political chaos?
Yeah, I mean, absolutely. I think the UK gilt market in particular is very vulnerable to fiscal slippage. We still have this kind of scarring from the Liz Truss crisis. And I think part of that, too, is you've got a greater hedge fund participation in the market. And so flows can move quite quickly. But maybe the more concerning thing is the inflation perspective. That's really the focus now. We had UK inflation data this morning. The headline number was encouraging in that it was below consensus estimates. It was a flat reading. I think more worrying is services inflation. Yes, it came down in the last print we had, but it rose further than market expectations, and the Bank of England's very sensitive to this services inflation. And inflation is more worrying for gilts than other markets because there's such a high share of inflation-linked debt. So as we head into the Bank of England meeting, I think the worry is that you're going to get some members voting for hikes, and that's kind of the preoccupation now, particularly for the long end, rather than the kind of fiscal slippage, which I think has gone more to the fore or background as you've had political members reinforce it.
OK, well, thank you very much, Skyler. Skyler Montgomery coming from Bloomberg Markets Live. And we'll stick with the UK theme because over at the G7, Keir Starmer, the UK Prime Minister, has been talking to the media, and he is saying that he will fight any contest to oust him as Prime Minister. We've heard that before, but it's interesting that he is still saying that. And he's saying, I want Andy Burnham to play a role in the UK government. So I suppose if Andy Burnham does not become leader, that is Keir Starmer's view of things he would like to offer.
I think this is really interesting because basically what he is saying is I'm going to fight. And I'm going to fight. This is my manifesto, and I'm going to fight for what I believe in. And if Burnham defeats him, then in theory Burnham... It pushes Burnham towards the idea of a general election, I think, because he can't say, I'm just a continuation candidate from the Starmer manifesto. I'm coming in with something new because we've had this kind of contested story in the Labour Party. And then you come back to the question of what Tice was talking about, and this vote fragmentation becomes even harder to call what happens in all those other kind of constituencies where Labour maybe wins because the vote split is split on the right.
Which is a good reason why we might not end up in an election situation.
Well, no, I think it would make the Labour Party more willing. If you do see the splits on the right, it would make the Labour Party, would make Burnham more willing to call a general election because he will go, we've got a split on the right. In the first part of the post system, therefore, we can maybe win more seats and maybe I do call a general election.
OK, a lot of moving parts then, lots to watch on the UK politics. In the meantime, Keir Starmer is still the Prime Minister and he is at the G7 over in France, of course. We're looking at live pictures. Ursula von der Leyen gathered with other leaders from the IMF and from Germany there, I can see, and they are getting ready for their day, essentially. We've seen some of the leaders speaking to the media already. For more, let's bring in our chief Europe correspondent, Oliver Crook, who's at that G7 event. It's in Evian in France. Iran was still a big topic of conversation during yesterday's developments at the G7 then. Ollie, we heard President Trump certainly talking about it, and a lot more has emerged in the past 24 hours about exactly what it is the US and Iran are going to sign up to in this MOU.
Yeah, absolutely. And I mean, we're all sort of waiting for that MOU, and I think a lot of the leaders were waiting for that MOU over the last couple of days. And I think that before it sort of made it out to the media, it was presented to a number of the G7 leaders. They got to take a look at it and sort of give their analysis. And of course, they've been spending the last 2 days with President Trump, impressing him in terms of what the substance of this MOU is going to be, and actually, of course, the role that the other G7 countries and, of course, the other partners, the Qataris, the Emiratis, the Egyptians, for example, attended this meeting and held meetings with the G7, what their roles will be going forward. Of course, the European role, particularly on the military side of things, trying to demine the Strait of Hormuz, reiterated yet again that that is something that they'd be interested in doing. The United States has signaled that they could actually use that help. But the problem is that these demining ships, it's a big concern for the Europeans. They're not basically appropriate for any kind of wartime activity. This is really a peace effort of demining the seas, and that is something that they need to have those guarantees of in order to begin with that. There is, of course, this other segment of this Iran deal, which has everything to do with sanctions and financial incentives. If Donald Trump wants to get the G7 on side with that, they're going to have to be part of those very sort of active discussions. And of course, the first deal, the JCPOA, the EU and many of these countries were directly involved in sort of that architecture. And of course, they have their own sanction regime. So if they want to now bring the Europeans into that, that is going to be a more extended conversation for the days and weeks to come. But that was really the geopolitical day yesterday, focusing on Iran and the Middle East and, of course, also Ukraine.
Okay, so what was the takeaway on Ukraine? Progress made?
I think so. I mean, I think that Zelensky can walk away and say, you know, he got something fairly positive from the president of the United States. I mean, Trump said very explicitly that he's sort of ready to re-engage on the Russia-Ukraine question. You'll remember that they, you know, obviously Trump said he was going to end the war in 24 hours when he was campaigning in the election. There was this concerted, really hard push, these meetings between Trump and Putin and Zelensky, of course, and that, of course, didn't lead to very much. And then basically the United States withdrew from the process. They've been distracted by the war in Iran. Now that Trump says the war in Iran is in the rearview mirror, they're ready to re-engage. And it sounds like they're ready to re-implement those oil sanctions on Russia. Many of those were paused in order to ease the oil glut that we've had as a consequence of the war in Iran. And of course, Trump yesterday said that he'll do everything he can to basically bring the war to a close. But we should say that the first half of the Trump presidency, the focus was really, as far as the Ukrainians and the Europeans were concerned, helping the Russian side of things, because what he kept saying to Zelensky is, you have no cards. Zelensky's acquired a few cards over the last few months. He's gained initiative on the battlefield. He's got that 90 billion euro loan from the Europeans. So going forward, it's about trying to get the United States on side and actually saying, you know what, we're in a much better position right now. We have this money backing. Now we need some military hardware and we need some goodwill from the United States.
I know that technology is on the agenda for today, a little bit later on in the day, perhaps, then, Ollie. Tech sovereignty, certainly something we've discussed around the AI theme running up to this G7. I wonder if that'll get much of a mention as we see AI leaders from the United States gathering with G7 leaders and perhaps with a wider group as well. I can see that it's not just G7 leaders in attendance right now. They have invited friends.
Yes, indeed. So yesterday was geopolitics. Today is all about the economy. The session that's going to be kicking off this morning brings in the IMF and the OECD, and we'll actually speak to the Secretary General of the OECD right after that meeting to get his appraisal. And they'll really be assessing the economic impact, obviously, of the war and now of the ceasefire and potentially the end of the war. What is that going to do to global growth? What is that going to do to inflation? We'll maybe get some clarity from those discussions from the Secretary General a little bit later. But of course, the main event I think that many people are watching are the AI CEOs from the United States, from Europe, all assembling for that working lunch with G7 leaders, the CEO of Anthropic, of OpenAI, and of course some of the leadership over at Google, Mistral from here in France, and really trying to get the global conversation going on AI. I mean, of course, everybody on the planet is talking about AI, but there is not a sort of collective conversation about regulating AI, the sort of cooperation among nations. And of course, over the weekend, we've had the United States coming in and basically banning foreign nationals from using some of the more experimental models from Anthropic. You know, you're seeing that AI nationalism. So for the Europeans, they're going to want to be a part of the sort of inner bubble, the inner circle for American tech and being able to gain access to those models. So that'll certainly be on the agenda. It'll be interesting to see if you get a sort of joint statement potentially from the AI CEOs across the globe, bringing the Europeans in as well. But of course, as you've been talking about all morning, for the Europeans, the main focus here is, I mean, the valuations of these companies in Europe are all basically below $25 billion. And we're talking about IPOing Anthropic and OpenAI at about $1 trillion a bit later this year. That's going to be the main focus, trying to gain some traction, some sovereignty, and some initiative and some capital, of course, here in Europe.
Oliver, we'll continue the coverage. Thank you very much indeed for this morning's work. Our chief Europe correspondent in Evian, France. Much more on this story is coming up. This is Bloomberg.
Welcome back. This is the opening trade, 8:49 here in London. So we are 49 minutes into a session that hasn't taught us a huge amount about appetite for European stocks. We're up by 0.1% on the stock 600. The German market certainly underperforms then, Guy. And that's really an auto story. It's interesting in this context. We've seen Barclays upgrading their view on European stocks. Hugh Gimber was quite positive with his view on European stocks and the opportunities that Europe offers now with the maybe Iran war in the rearview mirror. So interesting to see that we're making very modest gains with that as the
that trade is
backdrop.
not on yet, is it?
Yeah.
Certainly, that doesn't feel like it is on. What has been on, interestingly enough, has basically been the tech trade. So you would have thought that you'd see a broadening out. You'd see the areas like we were talking about earlier, chemicals, energy, kind of some of the spaces that you would expect to benefit.
And Nasdaq futures are up. 0.8.
And they got hits towards the back end of yesterday's session, so maybe there's a little bit of a bounce going through there. But nevertheless, it's been the easy trade, which has been to go back to what the tech trade was at the beginning of this year, which seems to be driving that story. Which takes us very neatly and nicely to what is happening in Paris right now. The Viva Tech conference is underway. The reason why Tom is not here today is because he is there and joins us now. So, Mr. Mackenzie, what is the vibe there? Europe obviously is struggling to gain traction when it comes to the tech trade. Is there evidence at this event, the conversations that you're having, that actually headway is beginning to be made? We heard about tech sovereignty down in Evian. What's the picture in Paris?
I think there's evidence, absolutely, that there is traction now in Europe. You've got 180,000 people visiting this event. It's billed as the biggest startup and tech event in Europe. You've got about 14,000 startups north of that. You've got the fact that Jeff Bezos is going to be taking to the stage in a couple of hours here, and that suggests that if he's interested in what's going on in Europe, then there is traction here. But I think the overriding concern right now, and certainly we got this from Maurice Levy, who's the founder of Viva Tech and, of course, the chairman emeritus of Publicis, is the concerns now that the US has the potential to cut Europe off from frontier models. The export controls around Anthropic. And Maurice Levy saying it would be a bit like having electricity and the US having the power to cut that electricity off to Europe. He says this has been taken very badly here in Europe amongst European leaders. And it really is we talk about wake-up calls for Europe a lot. This is another wake-up call. We have the dependency on energy, we have the dependency in Europe on defence, and now a moment where we're showing there is a dependency on at least frontier AI. So how Europe responds to that is going to be a key question. I think there's other paradigms, other shifts, other focuses in terms of how to build out alternative AI. We're going to be talking to leaders around world models, for example. Can Europe play a stake there? We're going to be speaking to the European Commission Vice President to see what the response is in terms of the sovereign play. To what extent should the stack on AI be owned by Europe? What is realistic? All of those questions are percolating here, but absolutely that decision to put in export controls around Anthropic has sent shockwaves through the European tech space, and how Europe responds to that is going to be front and centre.
It will, and it'll be interesting to see how it comes up in conversation as they pivot to talking about technology in Evian in France at the G7. Tom, thank you very much. Tom Mackenzie, of course, at the Viva Tech conference. And he and the team will be bringing us many more conversations from Viva Tech. We'll be speaking to the French ambassador for digital affairs and AI. Plus, ASML's CEO, Christophe Fouquet, will also be speaking to the team on the ground there at Viva Tech.
But Europe must be looking to the other side of the Atlantic, looking at what is happening in terms of the valuation story around the IPOs that we're getting. SpaceX in particular, just amazing over the last 3 days. Jumping for a third straight day yesterday, overtaking Amazon in value to become, get this, the 5th largest stock in the world. It IPO'd Friday. Shares closed 4.8% higher, pushing its market cap to $2.65 trillion, roughly $8 billion higher than Amazon's. We're joined by Neil Campling now, Bloomberg's senior strategist, to talk about all of these things. Somebody put out a note earlier on, which I thought was kind of about right. If I value a brick in my house at £1, does that mean I can then extrapolate that brick into all the other bricks that build my house to get you to an overall valuation. The free float on SpaceX is so small at the moment that I think the market's really struggling to deal with the demand picture that we are seeing. And I'm just wondering if we should be making that leap from kind of valuing one brick to valuing the entire house.
So if there were more bricks, they'd be worth less.
Well, I think I saw something similar this morning that was comparing the revenue pile of SpaceX today having a smaller revenue number in absolute terms than Reckitt Benckiser that makes toilet cleaner. So perhaps every bottle of bleach that we have, to your brick analogy, therefore means maybe Reckitt should be bigger than SpaceX. I know that it's a bit of a stretch maybe, but in terms of clearly there's the options market, as you called out yesterday, started trading yesterday. Quite rather concerning. Some of these triple levered funds were at one point were up 60% intraday. And then look at the options market themselves when they started trading. We noticed that the fifth most active, I think, call option was out there was one expiring tomorrow. 300 call. So buying the stock at 300. Another, the eighth most popular, was a $380 call compared to the $200 close. So that's a big short-term bet that we're going to see significant acceleration, which kind of suggests it's more of a bet, very much a retail trade than anything else.
Okay, and just briefly, Neil, I mean, this is a business that is now minting other billionaires. We saw them buying Cursor just yesterday. It's a very busy business, isn't it? For you just listed your enormous enterprise, and now you bought this AI coding startup for a mere $60 billion.
A mere $60 billion, but Cursor itself, we have to remind ourselves that Anthropic, and I know there's lots of sovereignty issues around the AI stack, but Anthropic's revenue run rate is 20x greater than Cursor. Cursor is a startup. Today I was looking at the CapeX forecast. You mentioned overtaking Amazon's market cap. Amazon's going to spend more than 4x on the hyperscaler CapeX next year compared to all of SpaceX across all three divisions.
Neil, staggering thoughts as ever. Neil Campling, thank you very much for joining us with the latest on SpaceX and the tech landscape. No doubt that will continue to be a feature over the G7. More on that on the Pulse. That's it for the opening trade. This is Bloomberg.